Hey there. What happens when the hottest real estate market in America suddenly turns ice cold? When a boomtown becomes a ghost town almost overnight? Welcome back to the channel. Today, we're breaking down one of the most dramatic housing market collapses in modern times: the Cape Coral crash. And trust me, what's happening there right now is sending shockwaves across the entire state of Florida, from Miami to Naples to Tampa and beyond. This is the story of how billions of dollars evaporated, how families got trapped in homes worth less than they owe, and how one city's collapse is rewriting the rules for everyone. So stick around, because this story is far from over. To understand the crash, we first need to understand the boom. And it was quite a boom. Picture this. It's 2020. The pandemic hits. Suddenly, millions of Americans realize they can work from home. The Northeast feels crowded and suffocating. Taxes are crushing people's wallets. And Florida? Florida is calling. It's warm. It's tax-friendly. And it's wide open. Cape Coral, a mid-sized city in southwest Florida, becomes ground zero for this migration wave. We're talking about 40,000 people moving to Lee County in just 2 years. That's massive, and they didn't come empty-handed. They came with cash. Lots of cash. Over 12,000 New Yorkers alone moved to the area in 2021. People from Illinois, Ohio, New Jersey, they were all heading south, and they were all looking to buy. Real estate licenses were processing record numbers of out-of-state plates. It was like watching a tidal wave in slow motion. But here's where it gets interesting. These weren't just families looking for a fresh start. A huge portion of these buyers were investors, speculators, people seeing dollar signs. By 2021, nearly a third of home sales in Cape Coral went to investors or absentee owners. In the busiest months, cash buyers made up 38% of all transactions. That's nearly 4 out of every 10 buyers. Think about that for a second. The city wasn't being built by people who wanted to live there. It was being built by people who saw it as a financial play, a quick flip, a rental machine, an investment hedge. And then something remarkable happened. Prices didn't just go up, they went absolutely berserk. From May 2020 to mid-2022, the median home price in Cape Coral skyrocketed from $239,000 to $441,000. That's a 75% increase in just 2 years. For context, a market is considered overheated if it runs 20% above its fundamental value. Cape Coral was running 70% above fundamentals. That's triple the warning line. Picture a house that sold for $280,000 in early 2020. 2 years later, that exact same house, literally nothing changed about it except someone painted the front door, was listing for $500,000, and it was selling in days, sometimes hours. Buyers were waiving inspections. They were offering $50,000 above asking price. They were closing in cash sight unseen. One investor told the local paper, "We all knew it couldn't last, but nobody wanted to miss out." And that right there is the story of every bubble ever. FOMO. Fear of missing out. Meanwhile, mortgage data was flashing red lights everywhere. Nearly half of all buyers in 2021 and 2022 were borrowing at or above 90% loan to value. Translation? They were putting down just 10% or less. Some were putting down just 3 or 5%. Adjustable rate mortgages came back into fashion. Interest-only loans made a comeback. Sound familiar? These are the exact same patterns we saw right before the 2008 financial crisis. The big rating agencies were sounding the alarm. Fitch and Moody's flagged Cape Coral as having unsustainable price growth, a 70% overvaluation compared to local economic fundamentals. It wasn't just a few worried economists. This was a consensus red flag. And yet the buying continued, because everyone was terrified of being left behind. Fast forward to May 2025. The median home price in Cape Coral is now $361,250. That's down 11% from the peak, and it's down 7.7% in just the last year. It's the sharpest decline among major U.S. metros. But here's what's really terrifying. It's not just prices that are crashing. The entire market is freezing up. Inventory has exploded. We're talking about over 3,000 active listings. During the height of the boom, there were fewer than 800 homes for sale. Now there are almost 4 times that many. Buyers now face 7 to 8 months of supply. During the frenzy, there was less than 2 months of supply. Let me paint the picture for you. Drive through a neighborhood in Cape Coral today, and what do you see? For sale signs everywhere. Overgrown lawns, empty driveways, entire blocks that are just sitting vacant. It's eerie, and the days on market are telling. The average home now sits for more than 75 days before finding a buyer. During the boom, homes were disappearing in a weekend. Now, nearly 3 out of 4 homes are closing below asking price. That's down from the days when bidding wars were pushing prices 50 grand above list. The psychology has completely flipped. Sellers are slashing prices to chase dwindling demand. Open houses that used to draw crowds of frenzied buyers now see a trickle of visitors. Negotiations are back, in a big way. Buyers are demanding inspections, repairs, price concessions. Things that were laughed out of the room just 3 years ago are now standard. Here's where it gets heartbreaking. Roughly 1 in 7 recent Cape Coral buyers now owes more than their home is worth. That's about 15% of pandemic-era buyers, and it could be as high as 20%. Think about the human toll here. A retired couple from New Jersey. They sold their home up north, cashed out their equity, and bought a Florida dream home in 2021 for $500,000. It appraised at just $390,000 this spring. On top of that, their insurance premiums have doubled since Hurricane Ian. Their monthly costs are now hundreds more than their fixed income can handle. They want to move back north, but if they sell now, they need to bring nearly $100,000 to the closing table. They don't have that money, so they're trapped. First-time buyers who stretched to purchase during the frenzy are in even worse shape. One FHA buyer who closed with 3.5% down in early 2022 is now underwater by over $30,000. Every month, that mortgage payment feels heavier. Listing their home isn't an option. They'd need to write a check just to walk away. So they wait. They hope. They watch prices slide and wonder what went wrong. Investors got slaughtered. A family from Illinois put down 10% on a new build in late 2021, dreaming of Airbnb riches. Their rental income vanished as tourism softened and competition exploded. Insurance and HOA fees soared. What was supposed to be a cash machine became a monthly drain. Their property sits vacant. They're exploring legal options to surrender the home without filing for bankruptcy. Across Cape Coral, calls to housing counselors about short sales, forbearance, and strategic defaults are on the rise. The dream of a fresh start in Florida has become a financial nightmare with no easy exit. And then there's the insurance crisis. Oh man, the insurance crisis. Since Hurricane Ian, 6 major carriers have failed or left Florida. Tens of thousands of Cape Coral homeowners have been forced into Citizens Property Insurance Corporation, basically Florida's insurer of last resort. In the hardest-hit zip codes, Citizens now covers more than 65% of all policies. And get this, premiums that used to average $1,600 to $1,800 have soared past $6,000. In coastal neighborhoods, annual bills of $7,000 are not uncommon anymore. One homeowner saw a jump from $2,900 to $6,600 in a single cycle. Another had a forced-placed policy at $5,500, nearly quadruple their original premium. For buyers, insurance is now as important as the price of the home itself. In some cases, insurance premiums alone eat up 30% or more of the total monthly payment. And flood insurance? FEMA's new risk rating system pushed average premiums from $800 to over $1,400 in newly mapped high-risk zones. Many homeowners can't afford it, so they're going uninsured. That's a gamble that leaves lenders nervous. Here's what's most important to understand. Cape Coral didn't collapse in isolation. The shockwaves are rippling across all of South Florida and beyond. Broward and Palm Beach counties are tightening building codes. New floodplain ordinances. Lenders are raising down payment requirements by 5 to 10% for any property flagged as flood-prone or carrying elevated insurance costs. A buyer who once needed 5% down now faces a 10 or even 15% requirement. Reinsurers, the companies that provide the financial backbone for insurance carriers, have quoted 30 to 35% higher premiums for 2026 contracts. They're citing the Cape Coral collapse as a warning sign. That cost surge is already filtering down to homeowners in Broward and Palm Beach. What started as a local correction has become a regional reset. Every new restriction, every premium hike, every tightened lending requirement, it all traces back to Cape Coral. Every policy shift from Miami to Jupiter is a direct response to what happened there. National headlines are now treating Cape Coral as the bellwether for every Sunbelt boomtown that soared on migration and easy money. Out-of-state buyers who were once the engine of Florida's growth are now pausing, reassessing. Some are pulling back altogether. Builders and investors are bracing for deeper scrutiny. Lenders are rewriting their playbooks in real time. This is the first time since the 2008 financial crisis that a post-boom Florida county has seen both home values and market liquidity unravel this quickly. So what does this all mean? What are the lessons here? First, when prices rise 75% in 2 years and you're 3 times above fundamental value, you're not looking at an investment. You're looking at a bubble. And bubbles pop. Second, when your market is fueled by out-of-state speculators and investor money rather than local demand, you're building on quicksand. The minute those buyers get nervous, they all run for the exits at the same time. Third, climate risk matters. Insurance costs matter. Building codes matter. You can't just keep building and building without thinking about the long-term risks. Cape Coral learned that the hard way. And finally, what happens in one market doesn't stay in that market. It spreads. It infects the whole region. Lenders get spooked. Insurers get spooked. Regulators crack down. And suddenly everyone is paying the price. Cape Coral was the warning flare, and South Florida chose to listen. The Cape Coral collapse isn't just a real estate story. It's a cautionary tale about the limits of growth, the dangers of speculation, and the speed at which a boom can become a bust. Hundreds of thousands of dollars evaporated. Families got trapped in underwater homes. Dreams became nightmares. And the fallout is far from over. We're still in the early innings of this story. The real question now is, what happens next? Will other Sunbelt boomtowns follow Cape Coral's path? Will South Florida stabilize, or will the crisis deepen? One thing is certain. The easy money is gone. The days of bidding wars and sight-unseen purchases and flipping houses for quick profit are over. A new era of caution and restraint has begun. If you're thinking about buying in Florida, or anywhere for that matter, pay attention to this story. Because the rules have changed. The game has changed, and the margin for error is gone. Thanks for watching. If you found this breakdown helpful, smash that like button and subscribe for more deep dives into the stories that are shaping our economy and our lives. I'll see you in the next one.